Welcome everybody to today's webinar. This is a CPE webinar, which I'll get to here in a second, but my name is Alex. I'm going to be your host here today. And what we are going to be talking about is chart of account structures for nonprofits and churches. And I am the VP of operations and oversee all of the kind of the post-sale teams at a company called Aplos Software. We build and support software solutions for churches and nonprofits, from anything from fund accounting to donor management to event registration to online processing, the whole thing. But kind of chiefly our main kind of flagship product over the last 15 years or so has been a fund accounting solution. And I have been on board for 12 of those years. It's actually the first paid employee of the company outside of the founding team. And so I have spent over a decade talking about fund accounting and chart of account structures. It, no joke, is actually one of my favorite things to talk about because I did not come to Aplos as a CPA or anyone that even knew anything about accounting. I thought debit and credit meant debit and credit card. I had no idea. And if that's you in the room, I did not mean that judgmentally. We will get there, right? But I come from a very layman understanding of accounting, and I've kind of learned from the ground up. So I enjoy this topic that we're covering here today, chart of account structures for nonprofits and churches. To me, it's the basics, it's the fundamentals, and it's the foundation that then everything is built on. So that's what we're going to be talking about here today. A couple of housekeeping notes, first of which the webinar is being recorded for later viewing. So if you need to leave or would like to view this at a later time, just let us know and we can get you that recording. Also, I believe everybody that just registered gets the recording link, I think, but if not, then let us know. If you have any questions, submit those questions through the webinar questions section, just like you did the OK and sounds good. I will answer questions as we go, maybe, depending on what kind of flow state we're in, but I will most likely answer questions at the end of the webinar. And we've got close to 200 people in the room, so just given the volume of questions, I'm going to try to end 15 or 20 minutes before our time, and we'll do some Q&A for that portion. And yeah, we'll also send you a copy of the presentation and recording after the webinar. So there you go. Just a couple of housekeeping things for these CPE certificate requirements. There are going to be poll questions as we do this here today, 6 of them. And in order to get your CPE certificate, you do have to answer 4 of the 6 poll questions, okay? You also have to be present for at least 80 minutes of the 90-minute presentation. Always bodes well for the people who jump in and say, can you send me the recording? Well, if you need CPE, you have to listen to me live. I have you held captive. And the last thing here is to complete the evaluation survey that we will send after the webinar. So be on the hunt for that. 4 out of 6, 80 out of 90, and the survey at the end. So what we're going to be covering here today is a combination of things. I go through these kind of systematically, but it all kind of wraps in, as you'll see. But we're going to be taking a look at how to review common chart of accounts structures for nonprofits and churches. We're going to understand the essential parts of a chart of accounts. We're going to see how a chart of accounts impacts the reporting for your organization, understand customization options for streamlined chart of accounts setup and granular reporting. Fancy way of saying we can show you how to get things out of your accounting system with a good chart of accounts. And we'll see how your chart of accounts and other categorical options work together. So again, all of these kind of blend into one another, but that's kind of the general takeaways that we're aiming for here today. So before we jump in, let's go ahead and get that first poll question out of the way. You should see a pop-up. Here we go. I'm going to select the first poll here. And again, you should see this as a separate window that pops up here for you. The question is, what is your chart of accounts experience level? Beginner, average, professional, and expert. And for each of these polls, I'm going to give it about a minute for people to respond. So about 30 seconds from now. Another housekeeping note while I have your attention. I have 3 kids, 2 of which have some sort of cold. It is not COVID, so it's just some sort of cold. But the little one, is a little baby, and she's been coughing in my face for now a couple of days with this cold. So I am now starting to feel a little raspy. So if I need to take a beat here and there to drink some water or clear my throat, I apologize. Also, I see some responses to this question in the chat or in the question field. Be sure to find the poll pop-up and answer it there. I'll give you another 10 seconds just to make sure. But any answers in here won't count. You have to fill out the actual polls here. So close it up in just a couple seconds. 3, 2, and 1. All right, so we've got 26 beginner, 46 average, 24 professional, and 4 expert. All right, good deal. Nice little range in the room. To those of you maybe on the professional or the expert side, this may be review for you. So hopefully it's still entertaining, but it's probably most helpful for the beginner or average groups. Okay, speaking of, let's start off with what is a chart of accounts. A chart of accounts is a list of categories that is used to track financial information going in, out, and through an entity, which is true, but a better way, or the way that I like to phrase this, is a chart of accounts is the story that you're telling about your organization. It just so happens that you have to create these categories to tell that story, but the framework here is you are trying to answer questions to people who are asking financial related questions about your organization. So you have to tell them the story. You have to give them a financial picture that is accurate and comprehensive. So in your chart of accounts, in your listing of accounts that any accounting system makes you create, because any accounting system is going to have you book entries and pull reports, and it all comes back to these 5 different types of accounts that you create in your chart of accounts. And there are 5. The first of which is a type of account called an asset. These are categories or accounts that you create to represent things that your organization owns as an entity. So this could be as simple as your bank account and the money in the bank accounts. This could be your fixed assets. This could be accounts receivable. This could be some sort of loan receivable. This could be, other types of property. So it could be a number of different things, but just think of it as anything that your organization owns, it would be likely considered some sort of asset. The next type is a liability. These are things that your organization owes. So OWE. If assets are owning, liabilities are owing. So this is debt, whether it be short or long term. Examples of short-term debt would be something like accounts payable. So if someone bills you and you want to track that, okay, I owe this person $100, but I'm going to wait 2 weeks for payment for whatever reason, that now becomes a liability. You owe that, you just haven't paid it yet. Another example of a short-term debt would be a credit card. So when you spend money on your Capital One credit card, you are spending Capital One's money, and then you then owe them that, balance. So in the short term, while you spend money on this credit card, you now owe that credit card. So that would be an example of a short-term liability. You could also have longer-term liability, which is typically anything that you owe over 12 months from now. So things like a mortgage or some sort of vehicle loan, or just any payable that is over a 12-month interval would be a long-term liability. And then you have your equity. We're going to spend a lot of time talking about equity here today because that is one of the chief things that is different between for-profit and not-for-profit or nonprofit entities. So we're going to spend a lot of time on equity here today. But equity at a high level is a breakdown of your organization's worth. So think of the example of a house. If I own a house that's worth $200,000 and I owe $150,000 on it, then my equity in that house is $50,000. The kind of technical equation to that is your assets equal your liabilities plus equity. The way that I like to phrase that is your assets minus your liabilities equals your equity. So your worth, not as a human, but your kind of financial worth for your organization is whatever you own less whatever you owe. If you owe more than you own, then you have a negative equity. You are not worth anything necessarily because you are over leveraged. You have too much owed out than you do your own possessions. The flip side is if you own more than you owe, then you have a positive equity. So that is kind of the general idea of equity. But again, we're going to talk about that a lot here today and how it changes for nonprofits and churches. And then you have your income. So your assets, liabilities, and equity, those are what are referred to as your balance sheet accounts. We'll talk about that later. And then what we're talking about here now is your income and expenses. Your income and expenses are your income statement accounts. So your income accounts are you creating categories to describe the ways that you receive money. So think of your own kind of personal finances. If you're creating your own personal chart of accounts and you want to create some income accounts, well, how do you receive money? Well, I have a job. Okay, so I have, wages. I have money that's coming into me for my work, for my job. Maybe I sell some things on the side. Maybe I have a side business. Maybe I just, get gifts or something. What are the ways that you receive money? And then your expenses are the ways that you then spend money. So utilities, rent, interest, office supplies, food and beverage, entertainment, anything that you spend your money on would be described as some sort of expense account. Again, telling the story of how you spend money. And I am a huge proponent of every chart of accounts should be customized for each entity. That goes for businesses and nonprofits alike. And again, that's just my own kind of personal opinion. There are standards, I guess, if you will, or at least commonalities to the way that you can structure a chart of accounts. But if you go and just Google, show me a nonprofit chart of accounts, that is going to be some boilerplate, IRS-laden thing that may or may not even describe what you do on a daily basis. So that's why I like saying, work through these 5 categories and come up with your chart of accounts. What are the things that you own? Well, you have 2 bank accounts and a car, and we do some accounts receivable. Okay, you have 4 assets. There's no reason to create a superfluous list of assets that you will just never use on a daily basis. They're worthless. Same with the liability. If all you have is a principal kind of mortgage for the building that you own and a credit card, then there's no reason to have these other liabilities created that you might get if you're just kind of copying and pasting somebody else's chart of accounts. Same with income and expense. Again, you are describing and trying to tell the story of how you get and spend money. So if you're using somebody else's language, then you're using their story. You're kind of fitting your activity in there. So we'll talk about that a little bit more. But I'm a big fan of customizing a chart of accounts for each entity. And also, the foundation for any accounting system is built on this chart of accounts. So as you'll see here in a second, right there, whatever you create for your accounts, you then use on a daily basis when you record all of your transactions, which are just the financial happenings, right? Money coming in, out, and through your organization through transactions. You are recording those transactions using the accounts, which then flow right through to your reports. So chances are, if you're going to your report section and you are struggling with getting information out of a report, it may not be the report's problem. Maybe, but it might not be. It might actually be something with your chart of accounts because it just kind of builds, right? So if your foundation is not set well, then you will likely encounter issues with booking transactions or pulling reports. Let's do poll number 2. All right, poll number 2. What is your role in the day-to-day financial management of your organization? Excuse me. All right, 34% said in-house controller, office manager, or something, bookkeeper. The text cuts off. 14% board member or advisor, 21% executive director, executive pastor, or other director, 20% volunteer bookkeeper, and 12% other. All right, good deal. Again, good spread. All right. So let's talk about how then this is unique for a nonprofit or a church. So everything we just talked about is relatable for any type of entity that you are, whether you're a person just by yourself tracking your own personal finances, or you're a business trying to make a widget or so, or you're some sort of nonprofit or church. Everybody comes back to a chart of accounts, but nonprofits and churches work a little bit differently as it relates to a chart of accounts. I just got to notice that my connection wasn't great, so hopefully that didn't impact you very much, but yeah, okay, we'll keep going. So here's kind of a high-level explanation of what fund accounting is. Fund accounting is a different brand of accounting. So just for those of you who might think fund accounting is just kind of this like, meh, it's basically business accounting, but just with some extra stuff. No, it really is fundamentally a different brand of accounting. It all has similar flavor to it, to where you have assets, liabilities, equity, income, and expense. You have transactions, like a lot of that is the same. But these are some high level kind of 5 differences in what actually makes fund accounting a unique thing for churches and nonprofits. So one is each fund that you need to keep track of in your organization is a self-balancing set of accounts. So speaking to maybe some of the accountants in the room here, this means that every fund that you have has to be in balance by debit and credit. You cannot post a transaction that debits one fund and credits another. Every fund has to have a debit and a credit and have a trial balance and a balance sheet and an income statement and everything by each fund. So the layman way of saying that is each fund is basically its own little mini entity within your larger total. So we'll get to some examples of funds here in a few minutes, but just think of your own nonprofit or church. Do you have funds that you're trying to keep track of? And if so, this would essentially mean that you need to create a completely separate chart of accounts for each one of your funds. Now, that's not necessarily what you have to do, but that is kind of the idea. Each fund is its own thing. And by way of extension, each fund then has its own equity. So as you do fund accounting, there is no distinction between retained earnings versus net income as it relates to a fund. A fund just has equity. So if I'm thinking in terms of a church, and that church has a general fund, a missions fund, and a building fund, and I wanted to see that comprehensively, I would also should be able to drill down and say, okay, show me a balance sheet now for just my missions fund. And that would show here's the missions fund's assets, missions fund's liabilities, and then the missions fund equity, kind of the overall worth of that particular fund. Fund accounting is dimensional rather than linear. So meaning if you need to keep track of things, you don't necessarily have to build your chart of accounts to be super, super long and have these multi-page chart of accounts. You can have a list of categories and then add this length or this dimension to it, which again, we'll look at here in a second as in some examples. But the reporting and the transaction entry is more dimensional than it is kind of just picking the right combination of accounts. And it's also focused on accountability rather than profitability. So accountability meaning most nonprofits and churches, you are most likely working, at least to the majority of your time, off of someone else's money. Someone has given you money to accomplish something, whether it be just through a donation. So I give $20 to the Central Valley Justice Coalition here in Fresno, and they can do whatever they want with that $20. I'm trying to support them, so I give them $20 a month. It could also be a grant. So it could be, hey, you tap the state or the federal government and say, here's what we're doing. You have these grants available. I would like some of that money, please. And so then they say, okay, here you go, so long as you use it for that thing that you just told us or in this certain way. So they now have an obligation to report back to whoever gave them money and say, here is how we are using, stewarding, allocating those resources, whatever language you want to put around it. The goal of a church or a nonprofit is not just to make an extra buck and provide some sort of widget or service. It is to accomplish some sort of mission or goal typically. And you now have an obligation to report back to whoever is reading your financial statements to show that you are being accountable with that money. And kind of tied into that, generally the idea of fund accounting is it is a brand of accounting that it kind of related to the above is missional rather than economical. So it's not just trying to dial in the reports to increase your earnings statement to get interest in outside investors and grow the company and blah blah blah. There might be some of that, but typically nonprofits or churches are started with some sort of mission, and that goal is to accomplish the mission. It then has to be done in an accountable way, in a dimensional fashion, with fund accounting as their own self-balancing set of accounts. So you can see it is kind of its own beast. So let's dive into that self-balancing set of accounts thing. So in a standard chart of accounts, you would create your list and you would have this very kind of vertical list here. It's very linear kind of vertical list. You'd create your assets, liabilities, equity, income, and expense. That is a standard chart of accounts that you can use for anything. With a fund accounting system, what you're looking at is each fund now has its own chart of accounts. So you have Fund 1's assets, liabilities, equity, income, and expense. Fund 2's asset, liability, equity, income, and expense. Fund 3, play this out for however many funds that you have going on. And so Fund 1, Fund 2, this would be your general fund, a grant fund, and an outreach fund. If you did this, what's my next thing? Okay, so if you did this, you could then provide a set of reports that is comprehensive that would be related to one particular fund at a time. So if I wanted to show a balance sheet and an income statement and a GL and a trial balance for just my grant fund, I would be able to do that because it has its own chart of accounts. It's in balance by debit and credit. It is its own self-contained thing, a part of my larger total. Okay. So again, you don't necessarily have to create multiple chart of accounts. We'll get there in a little bit, but that's the general idea: is a fund has to have its own balance in all of these different things. So let's take a look at the equity thing here real quick. So each fund has its own equity, no retained earnings versus net income. So, and again, in a standard chart of accounts, kind of a typical business setting, you have your equity section, which is broken down by three kind of broader categories. So you have your retained earnings. That is each fiscal year, you have your net income, which is that middle row right there. So you're tracking how much income over expense you have in this fiscal year. And then typically at the end of the fiscal year, you do an adjusting entry to roll that net income into your retained earnings. And so retained earnings is just your cumulative running balance of prior year's net income, right? So it's just kind of this cache of prior earnings. And then you have the current year's net income, and then you have your owner's equity. Now, the reason for that is if someone's looking at your balance sheet and they say, here's all of your assets, here's all of your liabilities, and then here's just one equity figure. If you're looking at it from a business standpoint, that might not be enough information. You might want to see, well, how much of your equity here is actually driven from owner's equity? So how much did the owners bring to the table, and how much are you basically invested into your owner here? Or how much has been saved up over the years in retained earnings, or how much of it is actually due from this year's activity, so the net income? Because you could be showing an equity figure of $300,000, and that might look impressive when you realize that 280 of that have come from this year. And then you think, wow, you guys have been around for 10 or 15 years. How is that possible? Again, the whole thing is you're trying to ask questions and kind of determine financial health, right? So this is why that is typically broken up in terms of a standard chart of accounts with your equity. But with fund accounting, again, each fund is its own self-balancing set of accounts. It winds up with its own equity, but there is no distinction between retained earnings, net income, or owner's equity. Usually nonprofits and churches are not framed in that kind of context. They are broken up into funds with donor restriction and funds without donor restriction. So the only kind of breakdown of equity that anybody will ever ask for is how much of your equity is has strings attached to it. So how much of your equity or your fund balances of your organization is kind of beholden to some sort of fund with a donor restriction, whether that donor be a person or a state or an entity of some kind. And then how much of your funds are funds without donor restriction. So how much do you actually have the ability to use without being beholden to some sort of arrangement, right? So that is the breakdown of equity for nonprofits. So some nonprofit fund examples here would be some sort of administrative fund. So typically referred to as a general fund. Think of this as your kind of master if it's not anything else, it's the administrative fund or the general fund. So usually if someone says, hey, here's $20, keep doing what you're doing. They don't specify it. They don't want it to be allocated to anything particular. They just say, we like what you're doing. Here's $20. That would typically go into some sort of general fund, just a general, you can kind of use it however the board decides kind of fund. And then you might have grants. So if you do get some sort of grant, I highly recommend each grant being its own fund, because then you have a unique balance to track and keep reporting for. So that way, if that particular grant ever needs a set of financial statements or information, it's really easy to filter in and get that. You may also have some sort of outreach fund or some sort of scholarship fund. An outreach fund might be a balance that you self-allocate where people can donate to that is specifically geared towards, outreach functions. So not buying pizza for the staff, but actually going to whatever your kind of target demographic is. Scholarship, you might want to say, hey, we want to put this person through some sort of classing or pay for their schooling. And so we want to tuck that thing aside and have people be able to donate specifically to that scholarship fund. You might also have a fixed assets fund. I've seen examples of this. I'm not a big fan of doing that way. But some folks like to kind of peel out their fixed assets away from everything else and put into their own fund. You might as well have a special campaign. So maybe you're doing some sort of build a campaign. So you want people to donate to that and receive donations for it. And again, back to the accountability thing, you want to show people that, hey, if you donate to this building fund, we're not just going to buy a car or give everybody raises. Like, that's not going into the general fund. This is money that is being allocated to this thing, and we can prove it. Here's the special campaign fund and all the donations that come into it. Or you might have some sort of demographic or purpose specific fund as well. Some church examples kind of follow a similar vein. A general fund, some sort of missions fund, a building fund, a benevolence fund. So, kind of a rainy day, like, hey, just as we just want to bless people and have a pool of money sitting aside that we can choose to, gift people with things. You also have a preschool fund. So the preschool might be its own kind of, business type entity, a part of the church, but that school is going to have its own bank account. Most likely it's going to be doing its own invoicing. It's got its own income revenue streams. It's got its own expenses. And so you want to track that thing as its own separate thing. I keep saying thing, but hopefully that makes sense. Peeled away from everything else. You may also like to have departmental or ministry-based funds. That is something that we'll talk about here a little bit later as we get into some of those other categorical options that you have, but I've seen that done a number of times as well. And then potentially a fund for pretty much anything. Funds can get out of hand very quickly. And I'd say that I've typically seen them get out of hand more for churches than I have nonprofits, because churches are in existence for a fair amount of time, and people come and say, okay, hey, I want to give you $1,000 to update the carpet in the sanctuary. And no joke, I have seen a fund for, name it. I have seen a fund for probably anything you can imagine. Communion crackers. I kid you not. There was a church that has a fund for communion crackers. Somebody said, here's $500 to help with the cost of communion crackers. And then the church said, thank you very much for the $500. We'll take it, and we will allocate that towards communion crackers. The benefit is you just got $500. The downside is that $500 has to be used for communion crackers. And so I have no idea how much communion crackers cost, but let's just say that the annual budget for those things is $100. Now you have this fund that is going to be, paying for this thing for the next 5 years. But now, because you accepted the money, you are now beholden back to that person to give them specific data into how you are stewarding that money that you've agreed to use for a specific purpose, which is a fund. And so now you have a fund for communion crackers. Yeah, I've seen a lot. And again, I'm not saying that in like a condescending manner. You can do a fund for whatever you want, just so long as you're keeping track of it. That's the key. I've seen many, many churches and nonprofits for that matter, but come to the table with 150 funds, and it's just stuff that's tucked away for these various purposes that they just have no insight into if we've actually used it for that thing or if it's even relevant. And so you look at your balance sheet and you see that we've got $50,000 in our bank account, so that seems fine. We can clear payroll, but then you realize that you have $75,000 in restricted funds. It's like, well, we have a problem, right? So funds can definitely get cumbersome. Let's get into dimensional rather than linear. So back to our kind of previous examples here of self-balancing set of accounts. Now let's take a look at an example here of how this plays out in dimensions. So again, a dimensional or a standard chart of accounts here would have your, this would be an example of a trial balance, So you've got your assets, liabilities, and equity here. You'll notice that 10,000 minus 3,000 equals 7. So there's your balance sheet equation there, asset, liability, and equity. Assets minus liabilities is equity. Framed the other way, assets equal your liabilities plus your equity. It's the same thing, basically. Sorry, didn't mean to scroll my mouse there. And then you have your income and expense. So this would be a standard chart of accounts set of financial data. In a fund chart of accounts, like Aplos or like any fund accounting system, you should be able to run something like this. On the far right, you have the same totals. Your balances did not change, but each fund has its own contribution to the story, right? So you might have $10,000 in your bank account, but how much of that 10,000 is allocated or stewarded for the outreach fund, the grant fund, and my general fund? So if someone sees I have $10,000 in the bank account, I want to go buy a piece of equipment for the sanctuary, excuse me, it's going to be $6,000. Do I have $6,000 to spend? Well, we have $10,000 worth of cash, sure, but you only have $5,000 in the general fund. So that is where fund accounting becomes so important, is when you look at kind of your macro level reports, how do you make decisions if you can't granularly get into what each fund is kind of contributing here? So each fund would have its own assets, its own liabilities, its own equity, income, and expense. Each one of these funds you could run the reports for just by itself, or this type of report is actually something that we have in Apple's called a balance sheet. Well, a balance sheet by fund and an income statement by fund. They actually be two separate reports because those are typically run separately. But yeah, this is kind of the dimensional aspect here, to where you not only just have a vertical list and an amount, you have this now horizontal grid, which shows you here's all of your funds in the middle and how that's all leading up to your overall totals here on the right-hand side. Accountability rather than profitability. So a couple of quick notes on this. Again, typically accountability means that you are working with someone else's money. You have a due diligence to report that money back to the public and to the donors that gave it to you in the first place. And you cannot commingle funds as desired. You have an obligation to the source. So again, I've kind of beat that drum a number of times, but the general idea is if someone hands you money and you say, thank you for that money, I will do with it what you ask, and then you don't, you can get in trouble. So in order for you to tuck that away and actually allocate that and steward it and be responsible with it, be accountable with it, requires fund accounting. Otherwise, it's a drop in the bucket. It's hard to track. And then missional rather than economical. So again, nonprofits and churches are typically created to solve some sort of problem or meet a need. They are typically started and run by missional folks. That's not always the case, but that is generally what we find. You also have typically a different daily focus and a mentality than a business. Again, a business, Aplos is a business, even though we provide software for churches and nonprofits that has this kind of philanthropic kind of nature to it. We are a business, so most of our meetings are around how to run a business. If we were a nonprofit trying to build something and focus on a demographic and solve a need or a problem, we might be having different conversations. I've been a part of a number of boards and different meetings, and the conversations are just different as it relates to businesses versus nonprofits and churches. And then fund accounting lends itself to the more missionally minded. So again, having this framework of, hey, we're trying to do this thing. Here's the goal. Here's the purpose of this nonprofit. We want to get donors to it. We also want to get this grant, which kind of comes alongside of us. We want to do this fundraising campaign and get people to donate specifically for this thing. And we want to do golf fundraiser. Like all of that stuff all of that activity lends itself to fund accounting, because again, you're not just trying to track profitability. You are trying to track the accomplishment of some sort of mission or a goal or a need, right? And all of the avenues that then point you towards that thing. All right, poll number 3. So the question is, what accounting software have you used to manage your organization's accounting? Okay, 50% said Aplos, right on. 27% said QuickBooks Online or Desktop. That's okay, I forgive you. 9% other nonprofit or church management type system. 9% another fund accounting system. 5% another small business accounting system. So good. Again, good spread. QuickBooks is it's the synonymous with accounting software. And I've done a lot of webinars, and actually one of these CPE webinars that I've done is on kind of the difference between our systems and why fund accounting just doesn't work in QuickBooks. Nothing against QuickBooks. If you were running a business, I would tell you not to use Aplos if you're running a business. It is not designed to execute a business. For the same reasons, QuickBooks is not designed to execute a nonprofit. If you know what you're doing, and if the complexity is not crazy, it can be done. I've seen it done. I've seen it done multiple times. I've done it, but it's just not. It's kind of like a round peg in a square hole. If the round peg is small enough, it can fit in a square hole, right? Hopefully that makes sense. It's not what we're talking about here today. So don't get me started on another tangent. How does your how does your chart of accounts impact your reporting? Well, thinking about everything that we just talked about, your chart of accounts being the foundation, having the assets, liabilities, equity, income, and expense by fund, it's kind of missional aspect. So how does this then flow through to your reports? Well, like I mentioned earlier, your chart of accounts is the foundation of your accounting. Everything builds upon your chart of accounts. So once you have your chart of accounts figured out and all of your funds and all of that different stuff, all your categorical stuff, that is your foundation. And then on a daily basis, you are now entering transactions which use all of that categorical structure that you just figured out to record, okay, we went here, we purchased this, we did this, here's what happened. boom, here's a transaction factoring in all of that foundational stuff, which then leads to your reports. If you go run a balance sheet or an income statement expecting the answer to a question and it's not answering your question properly, it could be the report's fault. That is definitely a possibility. You could be using a system that just doesn't have the right reports, or maybe you're asking the wrong questions. That also happens too. Or it could be that you're asking the right question, it's trying to provide you the right result, but in the way that you've designed the chart of accounts, it's just not getting you there, you know. So yeah, in accounting, debits and credits keep all of the entries balanced. Again, your assets, liabilities, and equity equal your balance sheet. So however you want to frame the equation of that, assets minus liabilities equal equity, or assets equal liabilities plus equity, either way, that is the balance sheet. And then your income and expenses form your income statement. Now, in the kind of nonprofit, official vernacular, the balance sheet is referred to as the statement of financial position. It's the same thing. There's nothing special about that report. That's a balance sheet. It is just a different way of phrasing it for whatever reason. And same with your income and expenses, your income statement. The nonprofit version of that is your statement of activities. Basically no difference in a business sense. It's called the profit and loss. It's showing your income minus your expenses is your net income. That is the purpose of those reports. And then depending on what system you use, you might have specific filters for accounts and funds and tags, which we'll talk about tags here in a few minutes here. But a lot of systems have these kind of extra filters that you can attach to things. We call them tags in Aplos. They might be called classes, in QuickBooks or in different systems. But your reports, again, are answers to questions. You are trying to go to your accounting system and ask it, hey, I'm caught up. All my transactions are in there. Based on what I've put in the system, now you tell me how much I've been spending on this, or what's my net income, or what's my fund balance, or how did that fundraiser do, or how's my department doing compared to their budget? All of those are questions that, again, are foundationally built on this chart of accounts, categorical structure, recorded in transactions using debits and credits by fund to keep all of the entries balanced, and then eventually wind up on your balance sheet, income statement, and pretty much any report that you can think of, potentially filtered by fund as well. And as you can imagine, there are thousands of unique combinations and preferences. I do another webinar that goes over kind of what constitutes good bookkeeping. And the idea is you kind of report and record things in line with compliance first, and then you worry about expectations. So if your board is wanting you to record or present data a certain way, and that is not the way that you are supposed to do it, you most likely want to do it the way that you're supposed to do it, and then we can reframe expectations and preferences, right? So that just goes to say that there are thousands of unique combinations and preferences of what combinations of categories you want to see. And again, your reporting section in your software should be able to do that, so long as it's let you set up the proper chart of accounts and record transactions properly. Let's do poll number 4. Oh, I guess I don't need to close my presentation to do this. That's good. What financial reporting are you wanting to monitor for a nonprofit or a church? Reporting for grants, departments, or I think it says ministries, yep. Multiple locations, or projects or camps, or other things. 38% said reporting for grants, 40%, which I guess this is not an even 100%, but whatever. A good number said financial reporting for grants, good number said for departments or ministries, 12% for locations, and then 42% so some sort of project or camp. Great. Well then, this is now a good time for us to segue into then, what about categorical options outside of your chart of accounts? Hey, Alex, that's a fantastic question. Let's get into that. So, other categorical options. In any accounting system, you will always have a chart of accounts. Anything, QuickBooks, whatever, always a chart of accounts. In a fund accounting system, you will then also keep track of your funds. So now you have two things. So in Aplos, we are a fund accounting system. We have two fields that are required every time you enter a transaction. We ask you what account is happening here. So kind of mechanically, what accounts are involved? Are you spending money out of your bank account? For what expense? Tell us the accounts that are in play. And then also tell us what fund is in play as well. So two different fields, those are required. You cannot not have accounts and funds. in a fund accounting system. But you then get into these other things. So we call them tags. Again, in QuickBooks, they're called classes. In other systems, they might have these other things. I'm not exactly sure what they call them, but the idea is there's some sort of optional thing that you can turn on in addition to your chart of accounts and funds to track more detail. Okay, so the way that I describe tags in Atlas is a tag is a further descriptor of income and expense activity. Okay, so tags and their equivalents in addition to chart of accounts and funds. A good question to answer is how granular is too granular. Each one of these we're going to dive into here, and then we'll take a look at some examples. So first, let's take a look at tags and their equivalents. So again, transactions will always need an account and a fund, but a tag is optional. So remember, this means that tags are not equivalent to funds. And for you QuickBooks people in the room, just keep tag and class as synonymous in your mind. Everything I'm about to describe as it relates to a tag functionality is exactly the way that it works in QuickBooks as a class as well. So these things are optional. So if I need to track something and I want it to have its own balance, its own kind of carved out, balance sheet amount, I want it to accumulate over years. I want it to be something that is filterable into its own standalone entity that is in balance by debit and credit. It's its own thing. Chances are that is a fund. But what about something that I want to transfer, report on that is not its own balance, but I want to see activity, I might want to budget for it. It all kind of is wrapped up into a larger fund. So what is that? So we call those things tags. So this could be needed or required per transaction, but in theory, they are a bonus to the above. Tags are traditionally focused on capturing more income and expense details, and they are quick filters on reports to dive into more granular data. So I don't have a slide for this, but in my other webinars, I use this example, which I'll try to do somewhat quickly because this one can snowball. But imagine that you are a parent and you have a kid. That kid goes to school, you drop them off at the beginning of the day, and you knew how they were at the beginning of the day. They have their backpack, they've got their shoes, hopefully, but you know how that kid was at the beginning of the day. You pick them up at the end of the day, and now their status has changed. They've aged a little bit, right? They're tired. It's like 100 and nothing, in Fresno. So it's hot. Their status has changed, good or bad. And so you pick them up at the end of the day, a new status, and you ask them, how was your day? Tell me about your day. And then the story that they tell you could be, fine, it was okay, or good. It can be a short story that they tell you, but chances are you will ask them for more details. So apply that now to your chart of accounts. Your balance sheet is giving you a status as of one day in time. So that kid, when you dropped them off, you had an understanding of what their kind of assets, liabilities, and equity were. You are looking at a balance sheet for that kid at the beginning of the day. At the end of the day, you have a new balance sheet. So different assets, different liabilities, different equity. That kid is worth more or less, at the end of the day than when you dropped him off. I'm kidding, but you get the idea. That's the idea of a balance sheet. Is between a spectrum of time, you're looking at a beginning and an ending date, and you are looking at where did we start and where did we end. And then the story that is told in between is your income statement. So the income and expense activity should properly describe how we got from the beginning of the day to the end of the day. So the more detail that you bake into your income and expense categories, the more elaborate and more accurate a story you can tell, right? Okay, hold that thought. Now play the example out to say, what if we now had two kids, okay? Both kids we dropped off at the beginning of the day. Both kids we picked up at the end of the day. Both kids have a status. Both kids were gone for a period of time. Both kids have their own individual story, but you collectively as a family have a status. You can ask them kind of at a macro level, hey kids, plural, right? How was your day? And they can kind of chime in and blah, blah, blah. And you can get a general sense of how the day went from their kind of macro level report, right? Or you can say, hey, kid one, let's hone into you for a second. Let's talk about you. How did you do today? How was your day? That may or may not be, maybe that kid had a bad day and maybe the other kid had a really good day. And so kind of it was a net positive. And so at the macro level, you thought everything was fine, but that kid needs some attention, right? So that differentiation of the kid is a fund, right? So you as a family have multiple kids. You've got multiple statuses at the beginning and the ending of the day. You can kind of ask a whole kind of macro level story, right? Or you can hone in to each kid. Each kid has its own status, its own story, but there is kind of this macro level ability as well. So that is the idea of accounts and funds, at least in my kind of very layman's terms example here. So as it relates to these now tags, right? So think of it now as these kids are in junior high or high school. So you pick them up probably in junior high because high school kids don't want anything to do with you. They're going to drive themselves, whatever. But you pick them up, you're asking the same questions. They still have a status at the beginning. They still have a status at the end. They each have their own status. They each have their own story. So that nothing changes there. But one of the kids is in a sport. So you say, hey, how was football? Or this kid has there's 6 periods in the day. So you want to hone into, hey, how was first period? Because I know it's, first period PE, first period PE sucks. I don't care who you are. That waking up that early in the morning with a bunch of smelly kids running around, that is not so fun. But I know that, you have math and you really like math, and that's right before lunch and your friends are in that class. So you can now hone into a more specific level of detail. It doesn't change the overall story. It just gives you more information and something for you to like dive into that helps kind of add more flavor or color to the overall story for that particular kid. Same with the sport, same with an activity, same with a band, same with a drama class. Again, play out the example as many times as you want. But that is generally the idea of some sort of class or a tag. It is optional. That kid does not need to be in a sport. Maybe you get what I'm saying. They have to go to school, but they don't have to be in a sport. So this is an optional thing that they are opting into that might lead to changes in their story, but it's also something that you can hone in on, right? So that's the idea of some sort of tag or an equivalent to a tag. Is it doesn't replace the fund, doesn't replace an account, but it does add more detail to income and expense activity. Sorry, I tried to do that one fast. I hope that example makes sense, but yeah. So how granular is too granular? Well, like funds, tags add dimensionality to your chart of accounts. So they are fantastic additions to capture more detail, but it is possible to get too granular. Overall, the question of granularity gets into reporting. Ultimately, that's where you need to end up, is someone, yourself included, is going to ask financial questions about your organization, and you want to feel equipped and able and accurately answer those questions. So if that warrants you creating a lot of a chart of accounts, a lot of funds, a lot of tags, a lot of all of them, that is not necessarily the wrong answer. It honestly just depends on your organization, depends on your complexity, depends on who's asking questions. All of it needs to be weighed against the reporting needs of your users. If you yourself are a very granular person and you're trying to bake in a lot of detail, but then every month when you go to a board meeting and no one asks about that level of detail, it may or may not be important. That's something that you will need to work out with your board. Vice versa, you might not be a granular person, but your board wants to drill into every single little detail and it's so frustrating. Well, maybe somebody needs to change, right? So either they need to soften their expectations and not get so granular, or maybe the granularity is important and you need to refactor your chart of accounts to be able to answer those questions. Either way, the end result is needing to answer financial questions accurately and hopefully quickly. So let's go through some examples here. So what are some nonprofit and church tag examples? Well, some quick ones we see here. These are the common examples. Again, this can be a number of different things, but typically fundraisers, campaigns, departments, ministries, locations, campuses, credit card holders, projects, staff members, missionaries, missions trips, events, revenue generating activities, and 990 statement of functional expenses type things are what we see tags for. Again, nothing is replacing an account or a fund. So all of these things would then imply that if I was going to book a transaction for, say, a department or a ministry, the implication here is I'm still picking office supplies. I'm still picking my bank account. So mechanically, that's where it's happening. That's what is occurring, right? I'm purchasing office supplies out of my bank account. I'm also still picking a fund. So where is this department or ministry held? Is this a part of a larger general fund? That is most often the case that we see, is the general fund kind of holds all of the departmental activity. departmental activity or ministry activity might be budgeted for, it might be watched very closely, but at the end of the year, the men's ministry doesn't carry over a balance and they are re-budgeted for based on their activity. Again, that is not a prescription. That's not the case for everybody, but that's a common example is this departmental activity or this locations activity or this campaign that we did or this fundraiser. All of this is activity that is unique and that we want to filter into, but it's also kind of already contained in a larger fund. So that is the idea behind some sort of tag, right? I could talk about tags for a long time. So if you have any questions on these things, feel free to drop those in the question field. But hopefully this helps us kind of a high level example for now. Let's do poll number 5. We got 2 more. We'll try to wrap it up here in a few minutes and get some Q&A time. So poll number 5 is, what do you find the most difficult about managing your chart of accounts? Okay, 20% knowing how to track grants, and I believe it says designated funds. Yep. What's this? 38% keeping my chart of accounts organized and not too long. Yep. 28% managing transactions across projects, departments, locations. Yep. 8% updating my chart of accounts each year, and 5% other. Okay, so where do you start? Where do you start when designing a chart of accounts? Well, this is going to be a recap a little bit, but again, I like saying that a chart of accounts should be customized for each entity. Everything we just talked about, no one in the room here, there's 200 people in the room, not one of you is going to do it the same as another person. Every church, even if you're similar size, similar demographic, similar whatever, a nonprofit, same kind of thing, you are each going to have a different board, a different staff, a different mission, a different tweak, a different flavor. So I like saying customize that for each entity. Now there are reporting requirements, which we'll talk about here in a second, but I suggest working through your assets, liabilities, income, expense, funds, and then whatever your tags are, work through them each individually and come up with kind of the comprehensive design. It also very heavily depends on what software you're using. So in Applos, we have, again, accounts, funds, and tags. You can have multiple types of tag. You can have a very robust and complicated chart of accounts very quickly. You can also have a very streamlined and easy to use chart of accounts very quickly. It really just depends on what you need and what software you're using. So I would suggest whatever your software you do use, talk to them, have them give you a deep dive into what their kind of chart of accounts capabilities are, and then use that to then use in your customization. I also say focus on your balance sheet first. Balance sheet is the easy part. So your assets and liabilities are typically non-interpretive, meaning you have assets and you have liabilities. That's it. Income and expenses are style. Those are flavor. Those are where the customization kicks in. But most likely you have a pretty good handle on what assets do you have, what liabilities do you have, and what funds do you need to keep track of. That will give you your balance sheet. And then you can then think through your income and expenses, because again, that is the story that you're telling. Back to that kid example, the more detail they give you in that story, the better, the less questions you have to answer. If that kid were to jump in the car and say, hey, my day was great, I know that you like to hear about what happened with this, and I did this, I drew a picture, and blah, blah, if they just give you all of that, that's answering all of your kind of, next questions. And so you and the kid work out, here's what I want to hear when you get in the car, right? Same kind of thing with a board in your chart of accounts. Board, what do you want to know? I could come here and I could just rattle off and keep talking for an hour, and you might just be thinking, are we good? Like, I have very simple questions. Or you might be thinking, hey, the nonprofit, we're good. See the net income, it's green. We're doing fine. And they might be asking, well, we want more detail. Like, just because you have a net income doesn't mean that we approve with what happened, right? Tell me what's going on. So think through that story. Think through then what requirements you have. Any non so any non-chart of accounts filters needed. So that's what we get back into, like tags or classes. I would, again, customize it, focus on the balance sheet, funds, income statements and expenses, and then get into those other categories. So what are those other things that we need to track? Back to those tag examples. You also want to think through any reporting requirements that you have. So if you have requirements as it relates to your board or your staff or just internal standards that have been set, again, back to like the phrasing of the story, right? So if you and the board can come up with, here's the story that I will tell you on a monthly basis, here are the questions that you will be asking, and I will be prepared to answer those questions. You can click through a board meeting super quick, rather than having someone just present a bunch of stuff and then have to answer questions on the fly. And then if you have external reporting requirements, those need to be baked into your design as well. So the IRS, any sort of grants, any sort of external, whatever banking, influences you have, there may be things that you need to factor in there when designing your chart of accounts, depending on who you need to provide reports to. And again, I like just saying create and tinker. If you are coming into a new accounting software, Applos or otherwise, give yourself some lead time. So don't necessarily bring in your old chart of accounts. That might be helpful, but chances are you're moving accounting for a reason. And so if you try to move into a new house and arrange your furniture in the exact same way it was in the old house, it may not work. You have different walls and a different floor plan. So same kind of idea in accounting. Why would you expect the new system to do something better with your old data? That might be the case, but chances are you're trying to get away from old data and old chart of accounts and now kind of prepare for the future. So create and tinker, give yourself some lead time, create something, post some entries, think through some examples, test the limits, try to think of the most obscure example question that you could get, and then post some transactions and then run a report, see if it works. If it works, fantastic. If it doesn't, back to the drawing board, keep tinkering, keep customizing, and go from there. Poll number 6. Let's see, how often do you update your chart of accounts? Never, every couple of years, once a year, regularly, or other. A few more seconds here, 3, 2, and 1. 13% never, 13% every couple of years, 21% once a year, 30% regularly, 23% other. I don't even know what other would be there if it's never and not rarely or regularly. All right. So here's what we covered here today. We did a lot. So a lot of talking, a lot of data. Each one of these things I could probably talk about for another half an hour. So hopefully this was helpful. Our learning objectives that were covered here today, we wanted to cover a review of a common chart of accounts structures for nonprofits and churches, understand the essential parts of a chart of accounts. I don't know what the pluralization of chart of accounts is, if it's charts of account or charts of accounts or chart of accounts. I'm not sure. It's like attorneys general kind of a thing. I don't know. See how the chart of accounts impacts your reporting for your organization. Understand customization options for streamlined chart of accounts setup and granular reporting. And then see how your chart of accounts and other categorical options work together. Some questions that I hope we answered here today is, what is a chart of accounts? What is unique about a nonprofit or church chart of accounts? How does your chart of accounts impact reporting? What about categorical options outside of your chart of accounts? And where do you start when designing a chart of accounts? So we have about 22 minutes left in our time here today. So what I would like to do is just open it up for some Q&A. And there are lots of Qs, so if you have some more Qs, go ahead and drop them in the question field, and I will do my best to answer everything here for you. If I can't get to anything, then I apologize. If it's Applos related, then feel free to reach out to our support team, and they can help get you some answers there as well. Okay, yes, this presentation is being recorded, so if you have the need of watching it at a later time, I do believe that you will get the recording link automatically, but if not, reach out to our support team and we can get you that there as well. Okay, so some of these questions were also dropped while I was talking about something, so I might need to clarify what exactly it's referring to. But this question is, does this mean that you can only spend what you have money for? I believe that relates to the fund balances, and the general idea is yes, if you only have $1,000 in your general fund and you want to spend $1,500, well, you might have more cash sitting around, but if that cash is designated towards something that you cannot spend for that reason, you're locked. So that's the game of designated funds, is you might have cash in your bank account, but if that cash is allocated, then you should not be able to spend it for related purchases. Should each budget line have its own fund? Not necessarily. Your budget is you planning what's going to happen in terms of income and expense activity. So at a high level, you are budgeting for your income and expense accounts. Now in Aplos, we do allow you the ability to also filter your budget by fund and or by tag. You can get very granular with how much you expect to spend and receive in general, and then buy a particular fund or combination of fund and tag. But each budget line item doesn't need a fund. You don't need an office supplies fund. That is not the thing. The fund is the bigger pool that the office supplies are being purchased for, right? So yeah, office supplies would be an expense account, and the general fund would be the fund that is tapped when you spend for those office supplies. How do you keep from funds getting out of hand? I'll take a sip before the answer to that question. That one, I don't have any advice for you other than be watchful. If you are a nonprofit or a church and someone says, hey, here's money, but I want you to spend it to do this, that is up to you on whether or not you need to accept that money. There are plenty of churches that I've worked with that have turned down checks of varying amounts for that particular reason of, look, we really appreciate you wanting to give us some money, but this is how our church or our nonprofit operates. This is what we're doing. These are our funds. If you give us money, this is what we're going to do with it. But I'm not going to set aside $500 for communion crackers. If you want to do that, that's up to you. Again, I'm not judging. I'm just saying that is how you can maybe handle that, is not accepting money for things that you don't necessarily want money for or want to track in that level. Do you need a different bank account for each fund? No. If you do not use a fund accounting system, maybe, because otherwise, how would you know how much of your cash balance is separated by fund? If you are not using a fund accounting system, that may be the right course for you. So that way you can guarantee this bank account has this much, and it's for this fund. That's how you keep it separate. But in a fund accounting system like Aplos, you have the dimensionality, right? So you can say, I'm going to go into my bank account, my Chase or whatever Bank of the West bank account, and I'm going to record a transaction, and that transaction came out of said fund. So if I look at my overall bank balance, it can show that there's $10,000 in there, but out of that 10,000, only 2 of it is set aside for this particular fund. So yeah, that's a common one that we see, is folks that have not been using fund accounting will set up unique bank accounts to track things separately. But in a full fund accounting system, that is not necessary. Once a fund is done, is there a way to delete it from the visible list of funds? I believe you are referring to being an Aplos customer. Not at the moment. There's no way to archive or disable or hide a fund, although I do think that we will do that soon, but I've also been saying that for a couple of years now, so don't hold it to me. If I had a magic wand and could control the engineering team, that would have been done a while ago. Nothing against them, it's just has not been prioritized. So yeah. But there is a little bit of a workaround. There's some things that I can recommend doing to kind of renumber and reorganize old funds that you don't need anymore. So reach out to our support team. We can help you out on that one, Susan. What is the specific or legal obligation for a nonprofit to use money for the purpose for which it was donated? I've heard that if a donor demands that money be used for a certain purpose, it can tend to seem like certain donors have more control over the nonprofit. Yeah, I think you're absolutely right. The point being there is, if someone is giving you money and then saying, hey, use this money for this thing, and you say, okay, will do, yes, you have now kind of given over, in a way, some power. And that is completely up to you to do or not. There's nothing legal about you, at least not to my knowledge, about you're not required to accept donations. If someone gives you a donation and says, use it for this thing, you could either say, no, thank you, I don't want your money, or you can say, hey, thank you for your donation. I noticed that you said it was going to be used for this. It's not going to be used for that. We are going to put it into our general fund. If you want your money back, let us know. Otherwise, we will allocate it the way we see fit. But that again gets into an operational question. So that is just kind of how you allow people to give money to your organization. If you said yes, you are beholden. So you do now have a legal obligation to use it for that particular thing. If you end up not using it for that thing, so back to communion crackers, if that person said, here's communion cracker money, 500 bucks, and then a year from now you say, we made a mistake, we should not have created a communion cracker fund, then what you have to do is go contact that person and say, hey, you gave for this thing, we actually don't want to use it for this. Are you okay if we roll it into the general fund or reallocate it for a particular purpose? If they say no, you owe them money back or keep it for the designated purpose. Or if they say yes, then now you have been released of that obligation. Can you try to maintain several general category of funds rather than have so many different funds that might get confusing? Yes, that's a good question. That gets into your chart of accounts design. So instead of having a bunch of granular funds, can you just kind of have a broader category that encompasses lots of those funds? I would say yes, but just keep in mind that each fund, the benefit of a fund is you can get into the granularity if needed. At the moment in Apples, we don't have the ability to do a sub fund, but that would be that would be beneficial for that question that you're asking. Until we have sub funds, all funds are equal essentially. So if you find yourself with a large list of funds that you want to kind of wrap into a bigger one, that is completely up to you. Just keep in mind you do potentially have to answer the question. So if in your accounting system you can't dive into that granularity, then it'd be beneficial for you to have an Excel spreadsheet or some other form of getting to that further level of detail if needed. Excuse me. Okay. Where does a spreadsheet fall under? I'm not sure what that's. I think that's asking for the poll question. What do you use? Okay, never mind. We don't have an accounting software, which is why we're implementing Applos. Right on. Welcome. I don't know if it will confuse the non-accountants, but you may want to explain that balance sheet measure equity at a point in time versus income statements. Yeah, I don't know if I ended up kind of covering that one in my kid example, Katrina, but it's a good point. Your balance sheets are typically dated as of one day in time. So again, back to that kid example, you knew how they were at the beginning and the ending of the day. Typically in reporting, you have a balance sheet for the beginning and end of the period. So, call it a month, beginning and ending of the month. And then your income statement is then the activity over that period of time to explain how you got from one point to the other. I have used an antiquated software called PowerChurch, just made the switch to QuickBooks Online, concerned about the fund accounting aspect limitations of QuickBooks. Yeah, they're there. Again, QuickBooks is a fine system. If you were in this room asking about how to run a business on Applos, I would say don't use Applos, go use QuickBooks or something else. We're not designed for businesses. But the same argument goes for QuickBooks. They are not designed for nonprofits. And the next question here is, what about the new module from QuickBooks that includes an option for nonprofits? So what that does is it does not turn their system into a fund accounting system. What it does is it creates classes and it kind of changes the language of things. So instead of, I forget exactly now, but it's like they changed some of the wording to not say customers and it's donors instead. And their classes are turned on. And so you can track your funds using classes, but again, classes are their activity filters. So they can't get you a balance sheet by class, or you can't separate your balance sheet by fund in that case. So I've done a webinar on the differences between Applos and QuickBooks as it relates to these things. So if you want to check out our webinar library, it's there. But again, it's that whole round peg in a square hole. If the round peg is small enough, it can fit in the square hole, no problem. So it doesn't really matter if you're using the wrong system at that point. If your volume and or complexity are at a level to where it doesn't make much of a difference, then it doesn't make much of a difference. So usually what I find is if people have more than 3 funds, it starts to get a little out of hand. But it's not a hard, fast rule. It's just a thing I've seen. Is it okay to just set up one fund, a general fund, and then set up categories under the general fund? Yes, it just depends. Again, if you need to track, if you have funds, donor designated or self-designated funds that need their own balance, then it might be helpful to create those things as funds. If what you're talking about is you have activity and you want to track activity, then you could just maybe get away with tags or just bake things into your chart of accounts and have one kind of master fund. That's also a possibility as well. Is it true that once you have an account list in your chart of accounts, you cannot remove it? I was told we'd have to keep every account. We have hundreds in our chart of accounts. Well, if you have a chart of accounts and you've used that account in a transaction, you can't delete it. You can disable it though, with the exception of a fund, but tags and accounts can be disabled if you do not use them anymore. So that is one way to clean up your chart of accounts. Yeah, my answer changes depending on how long you've been with Pathos as well, because if you're new, then you kind of have the choice of what to bring in and what to leave out. If you've been using Apples for a while, then yeah, there could be some, you might have some disabling in your future, but yeah. I understand that all nonprofits are different, but I was wondering if you have any example chart of accounts that someone setting up new chart of accounts in Apples might start with. Yeah, that one, I think we have some test examples. David, if you want to reach out to our support team, I don't know if we have any of those offhand anymore. We did in years prior. We might still have those lying around, but if not, we can try to find something for you. Is the slide deck available for us? Yeah, sure. Let's do this. While we're talking here, I'm going to download this as a PDF, and I will drop this into the handouts section. Downloads, here we go. Okay, that PDF is now uploaded into the handouts section for you. Is there a resource for finding grants that fit the organization? Not that I am aware of. Finding grants is a delicate game of which I have no opinion on. I have not ever been involved in that, so I unfortunately don't have any advice there. I missed the first poll question due to a logon problem. How can I get access to the first question? I can't relaunch them, but hopefully you have answered the other 5. To get the CPE credit, you do need to answer 4 of the 6. So as long as you've answered the other 5, you should be good. Is each kid a fund? Yes, in my silly example there, where you had multiple kids and the days, and each kid is kind of the example of a fund in that case. So if you have a church with 30 funds, just imagine that story with 30 kids, and there you go. Let's see. A better tag example might be tagging a big donor who supports different funds. The tags allow you to report back to that donor. Yep. In like human activity could also be a use for the tags as well. So like they said, tagging a big donor, or in my list of examples, I had credit card holders. So instead of having to create a, if I have one credit card balance but multiple card holders, but it's one credit card balance, that's one liability for me. I want to pay one bill, but I want to track the activity of all of the card holders. That could be another example there as well. And yes, it does cost extra for the tags. It's $30 per month for each layer of tag that you turn on. If monies are received for a project and expenditure commences, expenditures commences almost immediately and before the unique project fund account is set up, what is the best way to transfer the amount expended to the project account, considering that future expenditure would be correct? Yeah, so in Applos, you can do that 2 different ways. One is once you create a unique fund, you can do a fund transfer to kind of move whatever's needed over there. You can also create a fund and go back to the original activity and reclassify it to use the proper fund. That's what I would recommend, so long as you haven't closed the period or that doesn't kind of rock the boat in other ways. If you just so happen to be recording things and you created the fund later, then go back to those transactions, pick the new fund, and then that should then bring you up to date with that fund. Can you talk about the difference between fund and a tag again? Yeah, at a high level, a fund is, think of it as a complete carve out of your organization. It's got its own assets, liabilities, equity, income, and expense. You can report on it separately. It's its own like a mini entity within your larger total. Whereas a tag is completely optional, and it's just a further descriptor of income and expense activity. So it has nothing to do with balance sheet accounts. It's only activity-based. For restricted funds and grants, do we need an income and expense chart of accounts to properly record? That's into the chart of account design. So you could potentially have a grant income and grant expense, or use existing categories. And so long as you have that fund created for that particular grant, you then use your same categories. So your income statement doesn't change. You're just picking the new fund with the existing chart of accounts. So yeah, honestly, the crux of using Applos here is what What is it? What is a fund? What is an account? What is a tag? The more you can hone in on the differences and the balance between those three, the more successful you will be. Doesn't mean that you need to be a master, but yeah, those kinds of questions is like, we have this situation. Should it be one or the other? Yeah, it's a good question. And honestly, I didn't mention this earlier, but excuse me, back to that like customization thing. I'm a strong believer that you can have your organization created in 3 to 5 different ways in Aplos, and all of them be accurate and beneficial. It just really depends on which one you prefer and which ones report users like to see. See, what if I don't plan on using a software and want to keep track of all of this in Excel? Totally possible. Again, just depending on volume and complexity. If you are proficient enough in Excel, then good on you. Do you provide a consultant who can help with the customization? Kind of. We have an implementations team, but unless you are already using them, chances are you will probably be best off just contacting our support team, and we can kind of help educate you on how to use the system there. How should one record checks mailed to vendors that have not been processed by our bank at the end of the month? Those are just uncleared transactions. So on an accrual basis, yeah, you've got your payables that have been issued. On the accrual basis, you want to track it when it was accrued. So if you write the check at the end of the month and that doesn't clear until the next month, it just means that at the end of that month, you will have transactions in your register that are left uncleared, and that's okay. That's just the difference between book and bank balance. Let's see. So for example, what is the better way to distinguish to make operating expenses and program expenses different accounts or funds? Yeah, so operating expenses and program expenses, that one is, so that might get into the 990 categories there: program expenses, operating expenses, and fundraising expenses. Ultimately, you could have expense account groups that break up operating and program expenses. Chances are you are spending your money on different things in those two categories. So having kind of an expense account breakdown of those things would make sense to me. To me, your programs are maybe your funds. So, to have your expenses categorized to show, here's my operating expenses and my program expenses, and then you have your funds, then your designated funds will use the program expenses, and your general fund will use the operating expenses. So again, it's kind of a delicate dance there. Won't updating chart of accounts create confusion of financial picture between years? Yes, if you do update your chart of accounts, it will mess with things. So if you have an expense account called office supplies and you rename that to be entertainment, then on every report forever, no matter if it's in a historical period or not, will show entertainment and not office supplies. So that's where if you are redesigning your chart of accounts and renaming things, if you are going to be repurposing an account, I would maybe recommend disabling and create a new account if it's a complete change in function. If it's just a change in phrasing, so if you're changing it from supplies to office supplies, I don't know, something like that, or health insurance to just insurance, or I don't know, whatever. I can't think of a good example right now, but if it's something functional like that, then yes, you might be better off just disabling and rebuilding. Now, there's a lot more questions. I've got a few more minutes, so I'm just going to go until there's no more time, and we'll, if I can't get to anything, then please feel free to reach out to our support team. Do I have it listed here? No, you can just reach out to me individually, alex@aplos.com, or if it's something general to Aplos, just reach out to support@aplos.com, and we can answer questions from there. Is our data backed up nightly? Yes. If so, how do I get yesterday's data restored? There is not a way to do that. So depending on what you're trying to pull back, we might be able to help with it, but there's not a way to just restore from a backup. The backups are internal, but depending on what you need, we can maybe work that out. That's a support question, so I would reach out to them. What's the best way to track building loan payments in Aplos? That would be a payment in your register, whatever bank account was paying that, and it's going to be a split between your interest expense and your loan liability. So I think we have an article on that, but otherwise you can help with that as well. Why should our church change from QuickBooks to Aplos? How hard is the transition to your software? It's a good question. again, I like QuickBooks just fine, but if you are using it for fund accounting and you've got more than 2 or 3 funds, chances are that is going to be difficult for you to use. But that even more so depends on your complexity and your volume. So again, it's not you can't not function in QuickBooks. It's just there's going to be walls. It's not designed to use for a fund accounting system. So it's not difficult to make the transition, depending on what you're trying to transition. So back to that other example of if you buy a new house and you're trying to arrange your furniture in the same way, that new house is probably not going to work very well for you, and you might get frustrated with it, but that's not necessarily the house's problem. So I think if you are looking to move from QuickBooks to Aplos, it's a good thing to explore. There is a video that I go over on the differences between our two systems. And I think I even did a CPE, like a longer form one on as well. There's a webinar library that you can have access to that those should all be available in. So yeah, I'd take a look around. You talk to one of our salespeople. We can walk you through the differences there. And then transitioning, you can do that a number of ways. So you can say, okay, as of this end of the fiscal year, we're gonna end this fiscal year on QuickBooks and switch over to Aplos as of a new fiscal year. So then you just kind of get the ability to just reboot, and you can design a completely new chart of accounts. Your old stuff will be there for reporting if you need it, but then the new system's got a new design. Or we do have migration and implementation services to where we can help take that old data and get it into Aplos in some way or another. So yeah, and that is all the time we have for today. I know that I've missed probably 15 or 20 questions here, so I apologize that we couldn't get to you. If you do have questions that you feel like are related to today's topic or that might need my I don't know, expertise, I guess, feel free to just email me directly. Full disclosure, I am going on vacation on Friday for a week, and we've got stuff going on this week. So if I can get to you this week, I will. If I can't, then I will get back to you in August, but feel free to just email me and I can help answer those questions for you. If it's something that is related to just Aplos in general, or a feature or implementation or migration or how to use, if it's Aplos specific, then I would reach out to support@aplos.com and they can get you some questions or some answers a lot faster than I can. So thank you, everybody. Hopefully today's information was helpful. If you have any questions, let us know. Otherwise, thank you for using Aplos, or thank you for using Aplos in the future. Wink, wink. And have a good rest of your week. Talk to you later.